Are quitclaim deeds subject to capital gains taxes? The answer to this might just change the way you think about transferring properties. Quitclaiming a property is a very convenient way to do things, but they have tax implications that you need to be aware of. From transferring the property to a child or just for an easy transfer when you're getting a tax deed to clear title on it. There's many advantages, but you need to know the rules. And we're going to cover all those in this video. So let's talk about capital gains, okay? I cover this extensively in my live conferences because this is going to dictate what you do with the property on a regular basis. So you got to ask yourself, in my method, number one is, what's my investment objective? What am I trying to accomplish with all this? Not just in this one deal, overall. I want to make $200,000. I want to make $500,000. I want to make $1 million. I don't care what it is. Okay, then what are we trying to accomplish in this package of deals? So when I'm looking at a property, the one thing that is always going to influence my decision that I always tell people to look for is taxes. Okay, it's not whether I'm going to flip the property. It's not whether I'm going to rent the property out. It's not whether I'm going to wholesale the property. All of those are interesting, but each one of those is going to impact what the capital gains taxes are going to be on that property. Now, there's two different ways capital gains is paid. Either short-term, less than 12 months, or long-term. Short-term, less than 12 months is always going to be the higher rate. That's the battle you hear all the time with the politicians. We're going to change the capital gains. We're going to change the capital gains. And this affects everybody on a regular basis. So it goes up and down all the time. I'm not going to get into the rates as of this recording because who knows when you're watching this. It's something you need to be aware of all the time and know the rules. So if I sell a piece of real estate that I got into, and it doesn't matter, real estate, stocks, or whatever, that I've only owned for less than 12 months, it's subject to short-term capital gains taxes on it. It goes way up. I was just sitting with my CPA having lunch yesterday, and we were talking about how the IRS code is written by politicians trying to incentivize us to do certain things. They don't want us to just churn through things and just make a bunch of capital. That doesn't keep things in the marketplace, if you will. So if I'm just doing nothing but short-term capital gains on it, they're like, well, we want a big piece of this because all you're doing is taking money out of the market. Now, if you turn around and hold that asset, stock, or whatever it is, longer term, more than 1 year, 12 months, now you're keeping that money within the marketplace. So we're going to give you a favor and we're going to charge you lower capital gains on it. There's the two advantages there. So when I'm quitclaiming a property over somebody, I'm not subject to short-term capital gains. And I'll give you an instance of how I would use that. Let's say I'm going to Georgia and I buy a tax deed certificate there with a 1-year redemption period and it's got a 20% penalty. And the opening bid is like, I don't know, $10,000. I'll give you an example. I got one, opening bid was $7,000. I bought it for $30,000. So I own the property at $30,000. Okay, I talked to the property owner, the former property owner, and said, are you going to redeem? In order to redeem, you're going to have to pay me $30,000 plus a 20% penalty. They said, no, we're not going to redeem. This is our parents' house. You know, they were the adult kids. We just went out of the property on this. I said, okay, would you be willing to quitclaim the property over to me, thus avoiding me having to actually foreclose on the property, which would require time and a lot more money? And I said, I'll even give you money to do this. I'll pay you $5,000. You quitclaim the property over to me. Well worth my money. Okay, for two things. First of all, they quitclaim the property over to me. Now the property, I own it, okay, for what their cost basis was on it, because there was no transfer over to me. There wasn't a purchase of the property. Okay, now I own the property instantaneously. There is not a capital gain situation, but when I go to sell that property, I'm going to be subject to taxes based on their cost basis later on. Again, you're going to talk to your accountant about this later on. But what are the advantage to this is I didn't have to go through in the state of Georgia, okay, would have been an embarment, which takes about 4 months and about $3,000 or $4,000 to make that happen. So I've avoided all that. And potentially, I've gotten overage on this, which is excess funds. If the opening bid was $7,000 and I bought it for $30,000, okay, technically there's $23,000 in excess funds on this. Okay, if they quit claim the property over to me, I could actually request all rights to everything, including that excess funds. And guess what? I get that also. Man, there's so many advantages on that. So not only that, if I look at this and say, okay, now I want to sell the property. Well, wait a second. Now I'm going to be subject to short-term capital gains on a cost basis that's way down here. I might think twice about it. You see, this is really interesting. It's a great conversation because now you start thinking, it was like, wait a second. I get these people that are like, oh, there's loopholes within the tax. There's no such thing as a loophole in the tax bill or the tax code. They're putting it there to incentivize you to do something particular. They're saying, look, if you want to sell it, you can, but we're going to whack you with taxes on it because you just took money out of the market. And money is what makes the markets go. So in adverse, they say, but if you keep it for 1 year, we'll go with shorter term capital gains. So now I'm going to look at this and go, okay, wait a second. Instead of selling it right away, why don't I go ahead and rent the property out? Okay, so I go in there and I've got this property. This particular property I'm talking about is worth over $230,000. So I rent this property out for a couple $1,000s a month. I got $24,000 in cash flow a month minus my expenses. Just take 30% off of that for expenses. I'm still getting like a 36% cash on cash return. It's nuts. Okay, actually higher than that. Somebody do the math. A lot. Okay, so now I've got this cash flow going, but I'm still tied up in this property. But I could go in there and take a loan against the property, let's say for $100,000. What are the tax consequences for borrowing $100,000 in that property? Close your eyes. What do you see? Nothing. There's no tax consequence for that. So I've taken the cash out of the property. Now I'm reinvesting that somewhere. I still got the cash flow of the property. I want you to take a step back and think about the people writing the tax code. Didn't they just accomplish something? I'm providing housing for somebody. I'm pulling cash out. I'm buying and doing another deal. I currently have this deal. All of that money right there, we're talking over $130,000 is still in play. Instead of me selling the property for $230,000, putting that money in my pocket and not doing anything and say, oh, you do that, we're going to charge you a lot more in taxes. So again, the code is, there's advantages to keeping it longer. I say, some people say, I want to sell it right away. Okay, understand the disadvantage to doing that. Or in a situation, you might say, that's not a disadvantage because I want to go do something else. It's not always what it appears to be. So I always tell people, don't be so quick to go, oh, I'm going to get this, I'm going to sell it, I'm going to make all this money. You're going to make all this money, and they're going to go, now we want it back. Understand that you always have a partner in every deal you do. It's called the IRS. Okay, and that's not a four-letter word. The IRS, the code is set up for you to win. So if you take a step back in that scenario, you go, it might be more advantageous for me to hold this for at least 1 year. Another way to do this is I could sell the property with a 1-year contract. In other words, we do a lease, a buyback on this where they lease it for 1 year and we don't close on the deal until the 12th month. That way I avoid short-term capital gains and I go that way. Again, talk to your tax professional. I am not a tax accountant, although I did stay at a Holiday Inn Express last night, okay? I'm just faced with this stuff on a regular basis. And it's always amusing to me how people think that there's a one dimension to this. I'm gonna get this property, I'm gonna fix it up, I'm gonna sell it. I mean, it's almost like you've been watching too many TV shows. There's so many more things that you can do with a property like that. Understand the tax advantages, okay, of quit claiming the property over to you. Now let's just get back to the quit claiming the property over to me. I avoided foreclosure. I avoided attorney's fees. I avoided capital gains on this thing. All sorts of things are happening when I do something like that. So always look at that being your first choice. The most difficult part of all of that in a situation where you're talking about tax deeds is getting the other person to quit claim it to you. It's not so much that as getting a hold of them. I mean, think about this for a minute. If the county couldn't get a hold of them for 3 to 5 years, what makes you think you're going to be any better? Now, I'm not saying it's impossible because I've done it a lot of times. Just understand there's another speed bump that's going to happen there. They're not going to call you up and go, can I quit claim the property to you? I mean, nobody's been able to get a hold of them to pay their taxes off. And so there becomes a little detective work, if you will. But once you do get a hold of them, you've got some options. And one of the options is to do a quit claim that opens up a whole gamut of profitability for you. These are the things you want to do. If it sounds complicated, don't worry about it. We'll walk you through the whole process. Just click on my link, higginsmethod.com, and my people will walk you step by step through everything you need to do to get the training and the help that you really need. Thank you and God bless.